Hello students, myself Dr. Sheke Pratima, Ahmednagar Jilla Maratha Vidya Prasarak Samaj's New Arts, Commerce and Science College, Ahmednagar. Public Finance. This is the 8th chapter as per the 12th standard syllabus, like the public finance in India. In the last video, we have discussed that the public expenditure, and today we have discussed the public revenue, the second part, like the components of the public finance. So the public revenue means the aggregate collection of income with the government through various sources. It is hold the permanent position in the study of the public finance, which is the part of the economy. We know the sources of the public revenue. There are a major two sources. First is the taxes and second is the non-tax revenue. Taxes is the first and most important income source of government, and the non-tax revenue is the other source. So let's discuss the first point related to the sources of public revenue, like the taxes. So if we have to focus the definition of tax, so the first definition will explain the Tausui, Professor Tausui. The essence of a tax as the distinguished from the other charges by the government is the absence of a direct, the quid pro quo, like the between the taxpayer and the public authority. Then next definition, like the Seligman's definition, Professor Seligman will explain the one of the most important definition, like the tax. A tax is a compulsory contribution from the person to the government without reference to the special benefit then conferred. We know the tax is a major part which is contribute the maximum the governmental revenue. So some essential characteristics are the most important, and the first is it is a compulsory contribution to the government, and every citizens of the country is the legally bound to pay and the tax imposed upon him. It is a major source of revenue to the government. Then the tax is paid by the taxpayer to enable the government to incur the expenses in the common interest of the society. So next, the important characteristics is like the payment of the tax by a person does not entitle him to receive any direct and the proportionate benefits or the services from the government in the return of the tax. We know these all the characteristics will explain that the taxpayer is the most important, and it is imposed on the income, then the property or the commodities and also the services. So that's why the common person will pay the tax. So let's discuss the next point related to this chapter, like the types of taxes. There are a major two types. First is the direct tax and second is the indirect tax. We know at present the indirect tax means like a GST, the goods and services tax. We include the all other taxes on that the one concept. So the first point is like the direct tax. It is paid by the taxpayer on his income and the property. So the burden of the tax is the borne by the person on whom is the lived. For example, the personal income tax, then wealth tax, etc. So what is the meaning of the indirect tax? It is paid at the time of the production or the sale and the purchase of the commodity or services. We know the different goods and services we consume. On that time we paid some amount, otherwise some price. So the other indirect taxes will be included for that the commodity or the services. So the burden of and the indirect tax can be shifted by the taxpayer, like the producers, to the other persons. So the impact and the incidence of the tax are at different heads. So the newly implemented the goods and services tax in India has replaced the all indirect taxes, then the custom duty. So that is called as the indirect tax. So let's discuss the next point related to the taxes, that is called as the non-tax revenue services. So non-tax revenue service means what? The government government administration, then the public enterprises, then gifts and grants. These are the public revenue. It is received by the public revenue. It is called as the non-tax revenue. So let's discuss the first point related to the non-tax account. First is the fees. Which fees we have discussed? The fee is paid in the return for the certain specific services rendered by the government, like the education fees, then the registration fees, etc. Then the second point is like the prices of the public goods and services. we consider that the public goods and services. A price is a payment made by the citizens to the government for the goods and services sold to them, like the railway, then fare, then the postal charges, etc. Then next is the special assessment. The payment made by the citizens of a particular the locality in exchange for the certain special facilities given to them by the authorities is known as the special assessment. For example, local bodies can be levy a special tax on the residents of a particular area where the extra or the special facilities of the road, then energy, then water supply, etc. are provided. The next point is like the fines and penalties. Which fines and penalties we have considered? The objectives of the imposition of fines and penalties is not to earn income, but to discourage the citizens from the violating the laws then the framed by the government. For example, fines for the violating the traffic rules. The income from his source is small. So the next point is like the gifts, grants and the donations. The government may also earn some income in the form of gifts by the citizens and the others. The government may also receive grants from the foreign governments and the institution for the general and specific purpose. Become a important source. This is the important source of development finance for a developing country like the India. So the source of the revenue is the certain in the nature. So next point is like the special levies. The consumption of which is the harmful to the health and well-being of the citizens, like the fines and penalties. The objective is not to earn income, but to discourage the consumption of the helpful commodities by the citizens. For example, the duties levied on the wine, the opium and the other intoxicant. So that is the special levies. Then the last point is like the borrowing. So the government can borrow from the people in the form of deposits, bonds, etc. It also gets the loans from the foreign government and the organization like the IMF, then the World Bank, etc. So it becoming more and more popular sources of revenue for the governments in the modern time. So these are the non-tax revenue services. So let's we discuss the next point related to the public finance, like the public debt. This is the most important point. So government also need to a loan. Okay. So we know the private individuals will like the debt, but government is also need to raise the loans. Like the rising debt is the most common activity of any government, because the government expenditure is day by day increases. It exceeds to the government revenue. So the public debt policy of the government plays an important role in the public finance. So there are a major two types of public debt. The first is the internal debt and second is the external debt. Why the governmental debt is day by day increases? Because we know the Indian economy will accept the social welfare program and our population is rapidly increases. So that's why the governmental expenditure is increased. So the first point is the internal debt. When a government borrows from the citizens, banks, then the central banks, then the financial institutions, then business houses, etc. within the country, it is known as the internal debt. Then the second point is like the external debt. When a government borrows from the foreign governments, the foreign banks or the institutions, so international the organizations like the International Monetary Fund means the IMF, then the World Bank, it is known as the external debt. So let's we discuss the next chart related to the internal and the external debt. So it is the raised within the economy, and the external debt the raised outside the economy, because we know the debt is a supportive part, it's a part of development. Then second point is like the internal debt, what is the condition, the voluntary or the compulsory in nature, and the external debt the voluntary in nature. We know the internal debt we use of domestic currency, and in the external debt use of foreign currency. And what is the difference between the internal debt and external debt? It's a less complex for the management and a more complex for management. It's related to the external debt. So this chart will explain what is the condition about the internal debt and the external debt. And the next point is like the fiscal policy. We know the if we have to classify the governmental debt, so the fiscal policy is most important, because we know that part is explain the situation about your economy. It is a means by which government adjusts its the spending levels and the tax rates to monitor and influence a nation's economy. It deals with the public expenditure, then the public revenue, and also the public debt. So it is the financial policy implemented by the government. The next point is the financial administration. It is the efficient implementation of the revenue, expenditure, and debt policy of the government. It is referred to as the financial administration. This includes the preparation and the implementation of the government budget along with overall growth of the country. So let's we discuss the most important related point to the public finance. This is like the government budget. We know the month of February, the finance minister will represent the budgetary policy. The budget is the important instrument of financial administration. That is the basic word is like the budget. So it is a wallet. So the budget is a financial statement showing by the expected receipts and also the proposed the expenditure of the government in the coming financial year. A financial year in India's the financial year is like the 1st April to 31st March. We know the Constitution of India has a provision for the actual financial statement. In every budget, a set of 7 the budget documents describe the detail of the government finance in India. Basically, this word is derived from the French word the budget, which means a bag or the wallet containing the financial proposals. So who is represent the budgetary policy and where? The central government's finance minister will represent the budgetary policy in parliament in the month of February. So the revenue and capital budget, these are the most two component of the budget. And the first the part is like the revenue budget. So let's we discuss the first point related to the budget, the revenue budget. So it is consists of the revenue receipts and the revenue expenditure of the government. The receipts are divided into the tax and non-tax revenue. So the revenue expenditure the comprises of the interest paid on the government borrowing, then the subsidies and the grants given to the state governments. Then the second point is like the capital budget. It's related to the capital, means huge investment we expected. So the capital receipts are the government loans raised from the public and the Reserve Bank of India. The disinvestment of the equity holders, then also the divestment of equity holding in the public sector enterprises, then the loans received from the foreign government and other foreign bodies. We consider that the state deposit funds, then the special deposit, etc. That is called as the capital budget. So let's we discuss the last point related to this chapter, like the types of budget. There are major 3 types of budget. The first is the balanced budget, second is the surplus budget, and third is the deficit budget. Let's we discuss the first point, the balanced budget. We know the government receipts and government expenditure. These are the 2 main component to the budget. So the government budget is said to be the balanced when the estimated the revenue and expenditure of the government are equal. Means the government receipts is equal to governmental expenditure, that is called as the balanced budget. So this concept of the balanced budget is advocated by the classical economists like the Adam Smith, and it was considered as a natural in its the effects on the working of the economy. So the modern economists believe that the policy of balanced budget may not always be suitable for the economy. The next point is the types of budget. It's like the surplus budget. So when estimated the government receipts are more than the estimated government expenditure, that is called as the surplus budget. A surplus budget may prove useful during the period of inflation. In the period of inflation, there is a tendency of the prices rise rapidly. We know the normal price will rise, that is called as the inflation continuously. This needs to be the checked, particularly in the interest of those who have the more or less a fixed income. The rise in the price can be checked by the lowering the level of effective demand in the economy. So a surplus budget should not be used in the situation other than the inflation, as it may lead to the unemployment and also the level of output in an economy. So let's discuss the last point is like the deficit budgetary policy. See, throughout Indian government will represent the deficit budgetary policy. So what is the meaning of the deficit budgetary policy? When anticipated government receipts are less than the estimated government expenditure, that is called as the deficit budget. This budget may prove the useful during the period of depression. In the period of depression, all economic activities are the low level, which results in unemployment. This can be checked by the increasing the government expenditure by the borrowing the money and through deficit financing. This will increase the employment, also the aggregate effective demand for the goods and services. We know it is also the encourage the investment. In modern times, the deficit budget is the most commonly implemented policy of any government. We know if we have to focus the developing countries like the India, it's also the sorted to the deficit budget technique and for the economic development, because we know if your governmental expenditure is increases means what? You support to your development, you support to your economy. So that is the main point. So let's discuss the last point related to this chapter, like the importance of budget. We know the union budget is the important because if the affect people and economy in general in a number of ways. So the taxes are the most interesting part of any budget. The taxes determine the fate of the business and the individuals. So the level of the disposable income of the taxpayers depends on the tax rates like the presented in the budget. We know the government expenditure on various the heads such as the defense, then administration, then the infrastructure, then education and healthcare, etc. affect the lives of the citizens and overall economy. So the budget is important because the government use it as a medium of implementing the economy and also the economic policies in the country. So that is the most important source. Otherwise, it's the most important the medium which is follow the concept of development. So the scope of importance of public finance in the modern economy, the undergone and the changes since the last 100 years. Okay, so I think in this chapter we discuss all the financial aspects and also the components related to the Indian economy. Okay, so let's conclude all the chapter. So goodbye everybody.